Guys, welcome back to the channel. Today I'm going to make a video on Bybit as like a beginner's tutorial to what's going on Bybit, and how to use it, how to set up trades, how to set up an account, how to deposit funds, basically, just a beginner's all around setup. So now if you're not sure what leverage is and you keep hearing people about Bybit, this and that, Bybit is basically a trading platform similar to like Forex platforms, if you're familiar with that lets you trade on margin. And so basically, if you had $100, you can place a trade for 10x that $100 or 100x that $100. You just have to be careful that you could get liquidated. And of course, if you get liquidated, then you would lose everything. They sell your funds to pay back the liquidation price. So basically, if you only had $100, you're really betting with more like, $10,000 or more, depending on what type of leverage and how much leverage you want to trade with. So let's go ahead and jump into here. This is Bybit. You want to go to just bybit.com. Now for US customers, you're going to have to use a VPN. So now I use ExpressVPN. It's a great company. It's quick. It's easy. You just hit this little logo. You're connected. You're good. I make my location out of Toronto, Canada, just because that has no restrictions there. So once we jump in here, you basically have a chart just like TradingView here. So it's pretty simple. You can chart right on here. You can do whatever you need. You can change the different patterns on here. You go over here and you click this little triangle and it'll pop open, and this is everything you would normally have on TradingView. Now, if you're not familiar with TradingView and stuff like that, this might be a little bit advanced for you. You need to be able to plot charts and have a little bit of, a sense about TA. You may not need TA. You can maybe go on, not technical analysis, but the news and stuff like that. Either way, it's risky if you're not familiar with how you're doing this stuff. So now to jump in, you can buy crypto with fiat. This is your fiat gateway right here at the top. You can bring in US dollars. You can link your bank account. I believe they take credit cards, but it kind of depends. I don't think they take them from the US. So you could, if you had, if you're from out of the US, you could use pretty much any of these others. They'll take Visa, MasterCard, Apple Pay, and you can get quotes on these different. These are companies that will supply the currency to you. Basically take your fiat and give you crypto. Whether you want to do BTC, ETH, USDT, and then from there you can swap to other currencies. So now you also have, spot is coming soon. We can go over to assets. So now you deposit, exchange, withdraw, anything here. XRP, EOS, BTC, ETH, USDT, all these can be traded. So I put on $141 or so just for this this tutorial, so we can place a few trades and basically walk you through everything step by step. Let me see here. So basically we can jump right in here to derivatives. So now you have basically three different types here. This is a newer one here. I would mainly recommend these top two. So inverse perpetual trades are basically coin margined. Basically what that means is that all of these, you can trade BTC to USD, ETH to USD, EOS to USD, and XRP to USD. So when these contracts settle, or basically when your trade wins or loses, it will be settled, basically it will pay you out in the coin. The other way to do this is USD perpetual. So basically, you have a lot more options here. You can trade. And what happens is when you settle these, when your trade wins or loses and it executes, they will pay you out still in USDT. Even though you're trading Doge, it'll pay you in USDT. Versus inverse perpetual, well, they will pay you in BTC if you're trading this. They'll pay you in ETH if you're paying here or playing there, and they'll pay you in EOS and XRP depending on what you're trading. So basically what this means is, let's say Bitcoin was on another bull run and it's going crazy, it's up only. You would basically want to hold, BTC and then trade in BTC, and then also as you win, it'll pay you out in BTC, which if you're feeling confident that you're in longs and you're going to basically just long it from wherever, BTC is really what you want because you'll get paid out in what you're doing. But not only that, as your money sits over here in your account, it'll also grow. Let's say you're doing isolated instead of, well, I will explain that to you in a minute, but basically what you're holding in your account, well, you're still exposed to the volatility of crypto. Versus if you jump over to the USD perpetual BTC, you can see here that your value is in USDT. So even though you're trading BTC, you're getting paid out in USDT. So in a bear market, kind of like we are now, it's a little safer for you to basically tether out. And that's basically what you're doing. It's the same thing as kind of tethering out. And then you're still trading, so you're still making money on the volatility, up or down. But you don't have to worry about it crashing hard, even if you miss the trade or whatever. You're tethered out. You're basically in USD. You're in a stable coin. So those are the two differences there. We could probably go ahead and jump into the trading now. Let's jump into ETH because I have a little bit of ETH here just for this. So now I got a little rising wedge, I guess you can call it, here going on the chart. Now this is kind of a tough call. I haven't really researched any of this. So basically I'm just going to show you a trade. It might not be a good trade. So just looking at this chart, it looks like ETH would probably come and continue on its path upward here to about $2,500, either to see a breakdown or a breakout or a breakdown. It is possible though that we can bounce here and then bounce back down or just trade sideways and get back to the 2,300 range. So if anything in this situation, I would say it's going to be heading up. So we'll just go ahead and put it along with this. Doesn't really matter just for our example here. That was a quick 2-second analysis for you. So what you have here is just like buying and selling on an exchange. Hopefully you're familiar with that. If not, again, be very careful here if you're not familiar with that. Just like a limit order on an exchange, this limit is the same thing. Market is going to be the same thing. This basically means, limit, you basically set your price, your order price, where you want to buy in at or sell at, wherever you want to place your trade. So let's say I was going to do a sell, if I was more interested in selling, I would probably want to do it somewhere around here, somewhere around the 2,300 mark, assuming that ETH would kind of climb down here, then break this trend line, and then further down. Now, if that happened, I don't really want to take that trade or enter in this trade until I'm confident and I know for a fact that it's broken this trend line. So now you can do that with a limit order. The same thing with like basically to the upside. If I thought maybe it was going to go like this, and then break out here at this point, you would basically put a limit order in at somewhere around, let's say, to confirm a little breakout and give it some room for some sideways action, 2560. So let's say 2560. Now quantity, I'm not sure what their limits are here. Let me see if I can try to place this. And so buy long. So the current order may encounter some following circumstances. Now, you got to be careful because if you're trying to do limit orders, if it's not far enough away from the price action, a lot of times they want to execute it as a market. So that may be what's going to happen here. So basically limit buy ETH USD. Order price is 25.60, which is what we put up here. That's where I want to get in at. And then of course the quantity is just $100. That's basically what I put here. Order cost, just to place the order, is going to be 0.013 ETH. And the order value is 0.0390 ETH. So estimated liquidation price. Now this is very important. You don't want to get liquidated. You could end up losing a lot of your funds or all of your funds if you're not careful. So liquidation is going to be 1934. So 1934. So that basically means when I place this limit order here, and once it executes, if the price of ETH was to drop down here around 1935, let's say somewhere down in here, I would get liquidated. So of course, if it went completely the wrong direction, I would get liquidated, which means that they would sell my assets, depending on whether I went isolated or cross. They would sell my assets to cover their losses, and make sure that they make money and basically break even so that they don't lose any money. So I don't have a take profit set up. I don't have a stop loss. My leverage is isolated 3x, which is up here, isolated 3x. And then the time till close is good till close. Now, you don't have to, you just click this to get rid of the confirmation window. So let me see if we can hit confirm. Try again later or try contact support. So I'm not sure what's going on there. See, buy long, confirm, and confirm. Okay, so I just stalled out a little too long. So that's what happened there. My limit order was placed as a market order because I believe my assets were too close to each other. The price that I wanted to buy in, and of course the price here. Most likely because I'm on the 1 hour chart or something like that. So now you have your buy-in here. So this little green line, it's got a little green dotted line going across here, will be basically your buy-in area. That's right where you bought in at. Basically, you want to see the red bar, which is the current price, either go above it, basically because I'm in a long, or below it. Now the same will happen for short. You know, you'll buy in right here on a market order, and it'll go down. All right, so if you look down here below, we could see that ETH USD isolated 3x, which is what I have up here. So this is my trade that's going on now. These are positions here. Now my position is $100, is $100 USD. And basically the value of this trade, it gives you here entry price, so you know where your entry. Now this is your liquidation price. So this is really important because you got to be careful not to get liquidated. Basically what's going to happen is they're going to sell all your funds basically to make sure that they break even and cover their losses, and then you're left with the remainder. So it kind of depends on if you're an isolated or, you know, or cross, but we'll go over that here in a second. So I got to be careful that the price does not dip way down here. So I'm not on that much leverage, you know what I mean? 3x leverage is not bad at all. So I got to make sure that we don't fall below this price right here. So I should be pretty safe with that, you know. And then it gives you margin, it gives you my profit. So right now I'm up less than 1%, but it's up 23 cents. So that's pretty good. That's not bad, right? It's a good day. And then it gives you your realized profit, profit and loss for the day, daily realized profit. So now you can add a stop loss once you've done this, or you can add it over here once you do these. Buy long with take profit and stop loss, or sell short. So now I have the option that when I bought this trade and I took this trade that I could click here and then it'll add the take profit and stop loss all in one shot as you go. Now a lot of times you might see a nice trade, you want to get in, you want to make sure everything's right before you go through, you know, setting up a take profit and stop loss. Or you can come down here and then just add it. As soon as you place the trade, you jump down here and add a take profit stop loss. So now you take profit. You can move this around here so that you can make sure that you can see the chart and what you're doing. So now my take profit, of course, if I'm thinking this is going up, to be safe, they could get rejected here and fall back down. So basically I would take a profit around 25.20, 25.20. Or you can use these percentage marks, but these don't really always work out. I would basically, you know, just say enter what you think, you know, your support level, your resistance level, and where you think it'd be good. Now, as far as a stop loss, I'm going to go probably to the previous touch on this trend line, which is like a previous low, even though we have a low here. Basically either here, actually this would be a pretty good bottom here, and if nothing else, it would have to break this trend line to go below this, and then we become a bearish situation. But you got to be careful with fake outs because the fake outs could punch down below this price. But just let's go with just 22.40, just so we have an idea what we're doing. And again, you could put these percentages in, but I don't like to do that. So it's much easier just putting it out. Now, what's really nice about Bybit is they do these take profit and stop loss triggers here. So this is right where your trigger is, and it gives you the number, you know, basically the price of where this is going to trigger. Now, if it starts to come down closer to this, and I'm not real sure if it might punch through or do a fake out, I may want to take this and you can just click and drag down, let's say to the previous low before that. All of a sudden your order is submitted and you're all done. You don't have to go back to type in the numbers, you know, and figure out exactly what you want to the penny or something like that. You know, pennies don't always really matter in this situation. It's more about your price action on your charts and your candles. And the same with the take profit. You can just click it and drag it up. Let's say you want to punch through and go to the next level. You know, you have another support, you know, resistance. You know, I haven't even looked to the left of the chart. You may want to take the next support or resistance that's right here. And so now my take profit is a little higher. So I think I'm going to close the day with about an 18 cent profit, 17 cents, 1 cent. I'll take the 1 penny. So basically your entire order was filled. Basically I got out with a market order. So and it's the same thing with the market as it is with the buy. You can do a buy with a take profit and stop loss, and and then it gives you total equity here, expiration date, everything like that, deposit exchange, everything is right here. Let me click on this and get rid of this, this, and this. Now the other option you have is conditional. So trigger price, basically up or down. So this is kind of the same thing. What you can do with a trigger conditional is you can basically put in a buy order if you think it's going to break, like I said, like somewhere in this area. If you think it's going to break in that area, you can put in a trigger price for this area, and basically it won't hit until it goes there. But you can also put a trigger price, let's say up here, and say that you want to buy if it hits this level, which means basically if it broke this trend line, you would want to buy. And if it breaks this trend level here, you would want to sell. And you can do that all in one order with a conditional, with the prices. Another thing I didn't show you was the trailing stop losses. If you're not familiar with trailing stop losses, basically what happens is if the price is doing, let's say it breaks down and then rejects back up a little bit and does like a cat bounce and then goes down again and then bounces up again. What you can do is have your trade set up. Let's say you entered the trade, here. Once it falls a certain amount, you're basically on a short. You're taking that profit. But then once it bounces back, you could set that to like a 5% or 10% or a certain dollar amount, and you can basically get out of the trade once it bounces back. So basically, if it was like a rejection, let's say you're falling here and you're making money on a short, and then it bounced and rejected back, you could exit at like a percentage of your trade as a trailing stop loss. So then that would then, it would, the price would go up and you would be out of that trade and not have to actually, exit out of the trade or hit your take profit or your stop loss. You could basically trade, with a much wider range of stop losses and take profits, because it'll basically catch on the fall and you'll catch all of the down action on a short and you would make all that money there. But as soon as it backs back 5%, bounces back 5% or so, you can exit the trade with a trailing stop loss. It's to protect you from another bounce or something like that. You would take all the profit from the downside and then not get very much from the bounce back. So trailing stop losses are interesting. They're pretty good. They're a little more of an advanced version. I don't mess with them that much. I usually just do the take profit and the stop losses. That's pretty much it. That's all you really need as a beginner, and that's basically what this video is for. So the other difference we have here is you have isolated or you have cross, and you basically click here to change your leverage as well. So isolated is basically, you're only betting what you bet, which in this case was the $100 here. So now if I lose that trade, I don't get I get liquidated, but I'm only losing that $100. I'm not losing my whole account. When you go to cross, under cross margin, all available balance of the corresponding margin account will be deployed to meet the maintenance margin requirements and prevent liquidation. All corresponding available balance can be lost in the event of liquidation. So what this will do is give you it kind of depends on where you bet. So let's say I had $100 in here. If I only bet 50 and I did, isolation, my stop loss, let's say, was like I get $1,000. But now if I did cross, it's going to use the other 50 that I have in my account to help prevent liquidation. So instead of my liquidation being at $100 or $1,000, it would be at like $500. It would give you basically twice the liquidation protection. But if you ever did reach down there, you could lose your entire account. So it's kind of a double-edged sword at the same time. Like, it really helps you, prevent you from getting liquidated, but you're risking your entire account not getting liquidated. So that's kind of tough. And then, of course, here is your leverage meter as well. Now you can do 1x, 2x, 3x. You can drag this along so it gives you 1 decimal, so you can change a little bit on the early stages. And as you go up, and you can go all the way up to 50x. So this is crazy. I would not really recommend anyone to do 50x. I can't really picture a time that's really good for, you just never can predict where the market's going. And to push it to 50x means that you are 100% sure that it is going nowhere but up, and it's not going to have any kind of pullback. It's just a crazy number to play with. For beginners, I would say nothing over 3x until you're familiar with the charts, you're familiar with this system and how to place a trade.
You know, and
and then once you get comfortable, I don't trade anything over 10x. 10x is a lot. You know what I mean? It's 10 times what you're talking about. If BTC moved 10%, you know, it's basically the same as if it moved 100%. That's good. You know what I mean? That's plenty. But a lot of you may try 50x. It may be worth it. So let's go to cancel out of that so I don't change that. So now basically this is the basics for buying and selling, you know, and setting up trades and setting up your buy, take profit and stop losses. You have your charts down here. You have your closed P&L, your active, conditional, filled, order history, everything like that. That's pretty much it for the day on the Bybit tutorial. I could maybe do an advanced one a little later on. We touched on some advanced stuff here in this video. But if you liked it, give me a thumbs up, subscribe. Let me know what you think in the comments. Thanks.